Welcome back to the third and last installment of my Tesla stock price prediction journey. And as I said last time, this is something where we are going to attempt to predict the stock price on a timeline of Tesla, something you should never do, but we do anyways. So before I start, this is not investment advice. If I will talk about this in the end again, don't just buy stocks based on what I'm saying here. Everyone has their own portfolio, their own risk profile. Nothing is guaranteed here. This is just me sharing my perspective on what's going to happen with the stock price. Everything is probabilistic. Nothing is guaranteed. Okay, now let's jump in. The big picture of the Tesla stock situation is this. Let's start with a technical analysis. And don't worry, I'm not going to draw lines here. That's stupid. But just look at the basic stock price developments. We had a low at 140 just before Q1 earnings, early 2024. And so we know that 140 was the maximum negativity the stock experienced. It jumped 10% up at earnings, even though earnings were very bad. And then another irrational 15% when the China news was announced. So that tells us that this 160 range is right now a pretty robust foundation and bottom, right? Or let's say resistance. So I think it's very unlikely that we break to the south of 160 again. And if so, it's going to be short term unless there's a major event. So I feel we can see this $160 range as a good strategic resistance on the lower end of things. Now, if you go back to the former high in the last cycle, that was 400 in November 2021. So Tesla reached 400 in November 2021. Now, this is very interesting, this former high, because when you look at the comps of Tesla, like what are the companies that are most like Tesla and ride similar waves? It's NVIDIA, it's Microsoft, it's Google, it's OpenAI, it's Anthropic. And when you look at these, you see two things. Number one, you see that each one of them, let's take OpenAI and Anthropic out of this because they're private and not publicly traded, but Google, Meta, Microsoft, and NVIDIA, they have all hit or vastly exceeded already their former 2021 highs. So Tesla is dramatically below its high at 180 right now. 400 was the high, 180 right now. Everyone else is vastly above these highs. So that tells us something. That tells us that Tesla is on a good track to getting back there very soon once people understand it's an AI stock and it's driven by things way beyond automotive. So I think that is, for me, the first interesting, base camp is 400. What you also see with the comparables, the comps, when you look at the price sales ratio, which is my favorite, I think price earnings make no sense for stocks that are, or companies that are still in a total innovation phase and can change a lot. So Tesla earnings can go up 4x with no problem. They dropped, 70%. They can go back up 400%. So price earnings is not a very useful indicator here because it's too volatile. If you look at price to sales ratios, Tesla, let's start first with the other guys. NVIDIA is at 35. NVIDIA trades at 35 times sales. Microsoft trades at 12.5. Meta trades at 7.85, by the way. That's a steal because they dropped the stock after earnings. Makes no sense. Meta invests in AI. They are a total leader. Meta is also probably completely undervalued. Google trades at 6.73. Well, Google has many problems. So I think Google is by far the weakest company in this whole set. And then OpenAI trades at 80 in October 23. And Anthropic trades at 200 price to sales ratio in October 23. Of course, they're much smaller companies, so take it with a grain of salt. So you have 35 NVIDIA, 12.5 Microsoft, 7.8 Meta, 6.7 Google, which sucks, and then 80 for OpenAI and 200 Anthropic. Now, guess where Tesla is? Tesla trades at 6.06 price to sales. That's crazy. So why is this important for the stock? Now we can triangulate a little bit where we are at. I think 160 is a strategic, bottom, a huge resistance to the downside. It trades at 180. Its high is 400, and all its competitors have already exceeded the previous high. So it's 180, 400 is the high where it should be in any reasonable universe right now. And on top of that, we also know even if it would go back to 400, it would have, something like a 14 price to sales ratio, which puts it still vastly below OpenAI and Anthropic, and still at less than half than NVIDIA and at the same level as Microsoft. And Microsoft, of course, has vastly smaller future TAMs than Tesla. So, and NVIDIA too. So it's pretty interesting. So I think when you look at all these indicators and metrics, we can, safely say Tesla is very, very cheap right now. Why is this important? Well, if you're a long-term investor, that's good. You can buy the stock and wait. But for short-term investors, there is a lot of suspense. There's a lot of pull to the upside. And it's all a question, when does the market understand? Don't comp Tesla with GM, comp it against the real competition. And when is this going to happen? Well, it's going to happen when the analysts understand what's actually going on. And this, I'm not the only one saying this. The whole story of Tesla as an AI company, it's already in the market. It's already disseminated. People like Dan Ives and Cathie Woods already talk about it. So it's just a question of time. I like these backdrops, even for tactical price predictions, because you want to know where you stand. Are you super cheap and there's a huge pull up and you're just waiting for the catalyst, or is it all a drag? I think the former is the case here, which makes it very interesting. Now, when we look at other environmental factors, right, surrounding this, what about the macro situation of the markets? Always important to at least know something about it. Well, let's start with the Fed and rates. I think this whole story is overrated a little bit. I think the rates will remain much more stable than people think. In other words, don't bet on the Fed too much. They might increase it a little bit. If inflation comes back a little bit more, they might lower it a few percentage points. I don't think there will be a big recession. So I think Fed rates will remain more stable with a slight downward trend over the next 12 months. In other words, you can discount this whole situation. It's not going to be a major influence on Tesla shares. The biggest tail risk in the world I'm seeing is Taiwan and the China situation. Should China truly really attack Taiwan and try to take it by force, that's a complete disaster and would be horrible for all AI stocks because of TSMC and the chip production value chain. So if that happens, we are screwed. But everyone knows that, and I think there's a huge diplomatic thing going on the back end of things, where the US and other people are really putting a lot of pressure on China to not do that, and also giving some carrots and sticks out. I wouldn't say it cannot happen if China rapidly destabilizes and there's an interest in creating more nationalism and attack Taiwan. It might happen, but I think the resistance against it of the world is enormous. So it's a tail risk. That's why this is not investment advice. That's why we all can lose all our money if bad things happen. But it's a small probability that this happens. When it comes to other macro influences and wars, we are definitely living in a slightly destabilizing world with Ukraine and Israel. The Biden administration is definitely not helpful and asleep at the wheel at best. So it's a question who wins the next election. If Trump wins, we will see a lot of de-escalation worldwide, and we will see a new era of peace, which is good for stocks. If for some reason Trump doesn't win and Biden gets back or stays in the White House, that is definitely injecting a lot of risk, big risk, geopolitical risk. And I think there's still enough people not asleep at the wheel to prevent the worst things from happening. But I think we will see an increased tail risk of nuclear war with Russia and all kinds of bad things. So let's see. But that looks very unlikely that Biden stays there. And if he stays there, he probably will get removed as a president at some point, or steps down. So, when it comes to these macro destabilizing effects, it also looks like we see a stabilizing trend over the next year, which is also pretty good. On the economic side and recession side of things, everything looks much less dramatic than it used to be, right? The recession risk seems very low, or if there's a recession coming, it will be mild. I don't fully understand why we got out of this whole COVID thing so unscarred. I think it was inflation in the end that took the hit and damaged everyone. So we got enough damage with inflation, and it seems like we're avoiding a recession. So if you take a step back on the macro situation outside Taiwan, it doesn't seem that there is some major problem coming that will destabilize the stock market significantly over the next 12, 24 months. Of course, you never know, but there's nothing that creates too much of a concern here. So I want to take the macro aside and say, well, it seems like we are in a pretty stable situation right now, and we can focus on the stock. Now let's get back to Tesla stock. So we are at 180 as of early May 2024. Stabilized after wild Q1 earnings swings. We have always the usual downward pressure on the stock with negativity about Elon's involvement with X and all kinds of stuff. But that's generally short-lived because it's mostly fake news, like the supercharger layoffs. The bullish catalysts are pretty overwhelming for the next few months, right? We have June 13th coming up with a shareholder meeting, where Optimus is going to be announced in the next iteration. We have Q2 earnings, and then we have on July 17th, and then we have August 8th with a big cyber cap reveal. My strategic prediction here is that we have a short-term target of 400. I think Tesla has to go back to its highs when you look at the comps and you look at the story evolving. I think 400 is a clear base camp situation where you have to get back to quickly. And quickly means probably in the next 12 months. So you have significantly less downside here, right? On the 180, kind of 160 base that we are seeing on the downside. And then you have this magnet pull towards the former highs of 400. And so in my opinion, this is a pretty safe bet that we get there in a reasonable amount of time, 12 to 18 months, if I had to bet, like the most likely situation. But the question is, what does the tactical trajectory actually look like in the next months? So if we put the 400 target here and say, well, we are probably going to get there. There's kind of a magnet pulling Tesla up to 400. What is going to happen between now and then? And I think August 8th, no surprise, the Robotaxi unveil is a super high interest event, right? So people will look at that. And every time you have that, it's very hard to see how we won't have a significant run up. And on a technical perspective, okay, what's a reasonable, most likely high around that date? Well, if you go back in 2023, what were the highs in 2023? 280. 255 was one high and 280 was another high. It's just very likely, in my opinion, that before 88, we are going to see that, or around 88. And that will be fueled by the shareholder meeting, by Optimus, by continuing FSD news, by continuing ARK Invest pushing their $2,000 price point, by Dan Ives with his $300 price point target price. And I think Dan is going to increase his target to 315 or 325 before August. And then we have Ron Barron, of course, telling everyone that he's in with $4 billion in Tesla, and this is going to 10x. So I think all these things will push the stock towards a 255 to 280 area around 88. And the rule's always the same. If the stock runs up too much before that date, it's going to drop after. And if it's going to run up not enough before that date, it's going to probably spike after the event. And for me, these are I wouldn't bet too much on these numbers, on these two numbers, but I think it's a reasonable target here around August, 255 to 280. If it comes in at 280 before August 8th, there's the probability of a dip right after the event is high. If it comes in below 250, the probability of a spike is high. Of course, you have to see this midterm magnet of 400 where we get to in the next 12 months or something. So that's what I think about short-term prices. Of course, these are all probabilistic concepts. I think a spike to 400 before August 8th is very unlikely. That's too much. And if so, there will be a major drop. It will be overbought. I think I always draw these lines. Where are we going long term and what can we be sure of? I think the next thing I'm sure of is 400, 12 to 18 months. And that will be a very stable base camp for the stock because it has to then continue up by 2026, probably hit the ARK price target by 2026 of 2000, maybe by 2027. It's pretty safe to say it has to hit that. And this line you can draw to these pretty safe predictions is kind of your baseline, right? And then the stock jumps up and below. And the more it deviates from that central line you were drawing by predicting the future correctly, the more bounce back you will have, right? So if you draw this line to 400, let's say by mid of next year, you know where the line is. And if it goes to 400 by August or something this year, there's a huge downward pressure to pull it back to the line. And if it drops to 160 or something, there's a huge upward pressure to pull it up. So it's important to construct this line effectively. So that's kind of my predictions. I'm pretty bullish on this long-term line that this is true. How much the stock cycles around it is a big question. I think knowing the line is important, and the line points to 280, 255 to 280 by August. It can totally under or overperform. But given the trajectory, given the catalysts, I think it's a reasonable window to look at. And from there, we will continue to climb. And the more we don't climb, the more bullish you should get. And the faster we climb above that, the more bearish short-term you should get. So that's my take on Tesla. I did what you should never do, predict the stock price on a timeline. And again, this is not investment advice, right? You need to understand the stock yourself. You need to understand your own risk profile and your own portfolio diversification strategy and risk strategy. The potential here with some call options or something to make a 10 or 20x is great. But you can also lose all your money. So you have to be very cautious what you're doing, and you have to always be diligent and not take this as investment advice. It's purely educational. Of course, everything we discussed here is subject to change based on news that is coming in, and that's why I will continue giving you my take on Tesla whenever something important happens and whenever I am adjusting or affirming these trajectories. So hope to see you around. Thank you so much.